Okay, hello accounting. This is your wonderful teacher, Mr. Tarpley. I forgot to tell you last class that I had to be called away for a mandatory defensive driving for the whole bus driving thing. So, that is where I am at. I apologize. Before I get started, I need you to have your notes out, and I need you logged in and ready to go in Applia so that there's not a delay here. If you're having trouble logging into Applia, remember it's your Gaggle email, and then the password should be Tarpley1 with a capital T. I'm going to pause and let you do that now. Please pause the video if there are trouble getting into that website now. And I'm back. Okay. Getting into what we did last time. Obviously this is not ideal because I would much rather be there going over this with you. But last time we started at chapter 1. I'm going to go through some of this pretty quick here. We talked about what accounting was. Yes, I'm clicking through these very fast. If you need to fill in the blanks, then you're going to need to talk to one of your buddies. We talked about Techno Consulting and Kim Park, which is our business example, as well as who our owner of the business is. I showed you the chart of accounts, which you will get a hard copy of later. As for today, I'm going to be giving you all of the answers, so it shouldn't be very difficult, but this will be something you'll need to go back and reference at a later time in case you're not sure what accounts to use. We talked about the accounting equation and how the equation must stay in balance at all times. If one side of the equation is increased, the other side of the equation must be increased as well. They have to be in balance. Remember, if this side equals 100, this side in some way, form, or fashion has to equal 100. If this side is decreased by 10, this side has to be decreased by 10. It always has to stay in balance, which is how you can check and make sure each way, or each transaction, that it's all good. Let's talk about transactions. We did a couple together. Let me skip to these here. Transaction number 1, we received cash from owner as investment. Alright, now I encourage you as you look through these transactions to look at the key words. Received cash, which means cash went up, and if cash went up, we know one half of the equation went up, so therefore the other half of the equation has to go up. Anytime it's coming from the owner, we're dealing with owner's equity. So Kim Park, our owner, is investing $5,000 of her own money into the business. Each part of the equation consists of at least 2 accounts. Let's go ahead and throw that out there. With cash being increased by 5, therefore the amount of cash went from 0 to 5,000. The capital account, which is the owner's account, started out at 0 and is also increased by 5,000. When we look at my example that we did, all my balances started at 0. Cash was increased by 5,000. Capital was increased by 5,000. So here are my new balances. Supplies and these other accounts that you don't know about yet, we'll get to. None of these were affected, so we're going to leave those zeroed out right now. If you'd like to go ahead and fill those accounts in, feel free and do that, but we'll do that here in a later date. Left side, 5,000. Right side, 5,000. My equation and balance? I hope you answered yes. Transaction 2 and 3, cash for supplies. On August 3rd, we paid cash for supplies of $275. If we paid cash, cash went down. Yes, you're right. Cash went down, so we exchanged cash for supplies. So therefore, one asset, cash, was exchanged for another asset. Cash was decreased by $275. And supplies was increased by $275. Remember my example with the paper. Transaction number 3 was cash for insurance. This is done the exact same way. Insurance is also another asset. I'll go ahead and tell you that right now. So it's done the exact same way. If I paid cash for insurance, cash goes down when I pay it, and the amount or the value of insurance increases by this $1,200. Is the equation still in balance? Let's look at it in example form. Okay, let's look at these one at a time, and feel free and pause the video if you need extra time to write this down. My new balances here were 5,000, 0,000, and 5,000. Cash was decreased $275 for that supplies. Supplies was increased $275. Both of these happened on the same side of the equation, so it's still in balance. My new balance of cash is $47.25. My new balance of supplies is $275. And my capital is still $5,000. If you add these two up, they equal $5,000, so yes, my equation is still in balance. The next transaction was insurance. I paid $1,200 in cash for insurance. So cash is decreased by $1,200. Insurance is increased by $1,200. So I've gotten my new balances of my assets, cash, supplies, and prepaid insurance. Nothing's done under my liabilities yet, and my capital is still $5,000. If I add these three numbers up, how much you want to bet they equal $5,000? Yes, you would be right. $5,000 on this side of the equal sign, $5,000 on this side of the equal sign, so it's all good. Transaction number 4, bought supplies on account. Alright, not every business buys everything and pays cash for it immediately. Sometimes you have to buy things and then later pay for them at a future date, which is called on account. An example of this would be bought supplies on account from a company called Supply Depot for $500. That means we're going to go to Supply Depot and they're going to give me $500 worth of supplies, and in turn I agree to pay them back $500 later. I'm not actually paying cash. I want you to pay very close attention to the fact that nowhere in this statement are the words paid cash. If cash is not said, then cash was nowhere used. Please write that down somewhere on your notes. Has to say cash to use cash. One asset, supplies, is increased. We bought $500 worth of supplies. The other is called a liability. Anytime you see on account, that's called a liability, which means I owe someone money on a later date. In this case, it's the accounts payable Supply Depot. Let's take a look at that transaction now. Had all my balances here. I bought $500 worth of supplies, so that increases my supplies. And I bought it on account. And because I bought it on account, that basically means that I increased a debt to accounts payable Supply Depot. That means I owe them $500. Now later, when that money is paid off, that debt decreases, kind of like when you use a credit card. When you use a credit card in a store, you then owe that money, and later when you pay it off, that balance will zero out. Well, the same thing works with an accounts payable account. So now I have my new balances for cash, supplies, and prepaid insurance, and now I have a liability balance and a capital balance. If we add all of those up, it'd be $5,500 on one side and $5,500 on the other side. Let's do one more transaction. This is paying cash on account. Alright, so I bought my supplies from Supplies Depot, and now it's time for me to pay off my balance. A balance must be paid all at once or installments if the vendor allows. The transaction, paid cash on account to Supply Depot for $500. A couple of days later, I get my bill from Supply Depot, and I decide that I'm going to go ahead and send them a check. It's very, very simple. Notice this time the words paid cash are right here. So if that says paid cash, that means I'm actually going to use the cash account this time. If I paid cash, cash goes up or down. Yes, that's correct. Cash goes down. And I'm paying off my debt to Supply Depot. So when I let's look at the equations and balance. Transaction 5, I paid cash of $500, so that's decreasing cash. And I'm paying off my debt to accounts payable, so I'm paying off my balance, so that decreases accounts payable of $500. Get my new balances going all the way across. This side, I've got zero liabilities and $5,000 in owner's equity. This side, if I add them all up, I have assets of $5,000. So let's look. Assets equal $5,000. Liabilities of 0 plus $5,000. Is my equation still in balance? Yes, in fact it is. Now I'm going to go back and look at something. And while I'm looking at this entire page, I told you before that the numbers don't matter. The numbers you can literally fill in later. So I want you to completely ignore all the numbers on this page and just look at the pluses and minuses, okay? if this side of the equation has to equal this side of the equation, I'm going to go all the way back to what I said. If there's an increase on this side, what do you have to do on this side? Increase. That's exactly what happened here. I increased this side, therefore I increased this side. Ignore the numbers. In this case, transaction 2, I'm decreasing and increasing on the same side. So that cancels each other out. Therefore, this side still equals this side. On this transaction, there was the same thing. I was decreasing one asset and increasing another asset. Therefore, this side is not affected, so my equation is still in balance. With this transaction, I'm adding to this side of the equal sign. Therefore, I have to add to this side of the equal sign. It's as simple as that. And my last transaction, I'm decreasing on one side of the equals, so I have to decrease or subtract from this side of the equal sign. If you completely ignore the numbers and follow the simple rule of assets, or this side of the equals, has to equal my liabilities and owner's equity, or this side of the equal sign, you cannot go wrong. And every single step of the way, you could go in and check. Alright, plus on this side, plus on this side, good. Plus and a minus on one side and nothing on this side, good. Plus and a minus on this side, good. Plus and a plus, good. Subtract and a subtract, good. You can check yourself every single step of the way. I'm going to leave this up here, and I want, if you need to, pause this video. I've got one more video to explain what we're doing next, so that you can go in and practice this, and then you'll be good to go. If you need me to replay this video, please ask the substitute to restart it. Do not tune this out, because I need you to get this. I understand me leaving is an inconvenience to us all, and I promise my awesomeness in its whole will be back on Friday.